come out today, we will know who and who have learnt. So let's make a list of what you have learnt. Wait, let's do. So what do we know about forex? Let's say, let's do from the beginning. We know about um market structure, abi? Everybody know what market structure is. Then what else have we learnt? Hmm? Top down TDA. Oya, people start telling me, oh, let's list it out now. We have plenty things to do. Elliott wave. It's one person me I'm hearing. Wait. Yeah, chart pattern, candlestick, support and resistance under market structure. What else? This is top down, oh. Top down analysis. PUBA. What else? What else? It's under market structure. I mean, let's okay. Let's just put this. Support or resistance. Okay. Markets correlation. No, it's not hard now. It's not hard now. You know enter where? Yeah. You know that thing. Then you do yeah, market orders. Hmm? You know me that tell the answer. you, you call. Execution is under the order. So let me choose a random. You come and I'll give you a topic to come and display. Mm. Who is that one that is hiding there? Okay, it's not in the class. Sorry. Oh, okay. Ah, who will I call? Who will I call? We'll, first of all, we'll use the board first. Then you use we use trading view. So Um, yes, you sir, please kindly come out. Kindly come out. Please encourage him and give us a quick recap on what you understand. Let's which topic should we give you? No, it's you people. I have the idea that people have learnt everything, so everybody should know something about everything. Eh? No, no, close book. Can I do? Come on, sir. Come, come on, sir. Come on, sir. Come on, sir. Take, sir. No, you're not going to choose. I'll be there to give you. Kindly make a very quick summary on what you understand by Fibonacci. Oh. So when you do a quick definition, we go to trading view. You okay? Uh-huh. Okay, let's practicalize it on trading view. This one is only here already. It's there. Very good. Hey, voila. There's no problem. Let's go for food. Yeah. Give us Fibonacci on this chart. Nobody should be peeping their book. Oh. Today is test day. Yeah, place it now. This is it. No. Okay. Drag that blue thing. Yes, drag it to the point that you're looking. Okay. So what do we basically use Fibonacci for? What kind of analysis? Not really. Okay, so okay, so let's give him three claps. So basically, Fibonacci is for retracement. So so to get levels of retracement, and these are levels that you can pick out in the markets for your TPs and all that. Okay. So next person, wherever this Bible is chasing, should come out. Come here. Come out. Please clap for him. You are shy in class. So give. Where is the razor? Michael, where is the razor? This one. Okay. All right. So come on, illustrate trend lines and channel. It's too simple for you. Okay. See. Yeah. Hmm? Trend line is not there yet. Okay. So that's a channel. So do a trend for us. Look for another place and do a trend. Oh, And change it.
So if we want to draw our train line, we start from the that's where the train started from. We pick out our parallel channel, then connect it.
That's parallel. China and also
Yes.
that.
So from the lowest point it started. Okay. Okay, I had to do the train line
Yes,
and
now
leave
you
the
have
train.
done channel.
Okay.
You have different.
Yes. So you can also you pick your train line to get the overall market rate. Then you start from where the market begin is movement, began the movement. Then connect it. Know the overall trend of the market. Yes, then you drag it to the future or to the nearest future. Then you look for a valid breakout. Then you look for a valid breakout, then wait for a retest probably. That is the market retest. So for this trend, this is the retest. But sometimes market does go moves aggressively
All
to
right,
the
thank you.
opposite direction.
Give him 5 claps. Thank you very much. So let me just quickly reiterate one little one little thing. Well, me, I don't know personally. Me, I prefer drawing my trend lines. Uh, let's look. Let's see. Now, personally, for me, if I want to draw my channels and trend lines, because of the trainings that we have collected, I prefer changing these charts to a line chart because line charts. Are you listening? So line charts gives you more accurate, give us accurate zones because when you change your chart to a line chart, there sometimes that on the normal chart there are fake outs that happens, but line chart does not recognize the fake outs that happens. So if I do like this, I have here. So this is a chart, right? So I can change. This is a trend. See, there are some fake outs that happened here. You see that? So this is important because there are sometimes that you'll be doing this kind of analysis, and you feel like this market has broken out of structure, out of the trend, but no, it's just a fake out. It is still, the trend is still valid, you understand? So but if you have drawn this trend line now, you might want to bring this one down here to, you understand? So I think it's more preferable to draw your trends and your channels on a line chart to give you more accurate, yes, accurate touches. See that? So thank you. Next person. Mm, Money White. Thank you. Come on, give us a detailed explanation and demonstration on support and resistance.
Yeah.
So our teacher, encourage our teacher.
Yeah. Good morning, everybody. Yeah. Okay. What I understood by support and resistance is when you open the market, let me say in the morning, and you've done your you have mapped out your zone and your trend line. I think the next thing is to look at for support and resistance to know where the market reach and had resistance and where it get down and had some support.
So what is support? What is
Okay, um, support and resistance is the one of the method or tools or techniques used to analyze the market, trying to identify
not a method?
okay, trying to identify where the market reach and had resistance and where you get down to and has some support.
So what is a support?
Hi. Okay, support is um, you get support or you from the point where the market get to and it has some revise or it revise from a downtrend and start going up. So it has some support before the market had some retracement.
Class, are you happy with that definition? Yeah?
Okay,
Okay,
can I have
so
okay, no.
I'm choose another chart.
Okay, no chat. Okay, okay, bro. Okay. US oil.
Chart.
Okay,
Give us two supports, demonstrate or
okay,
practicalize your areas of support and resistance.
okay. For example, um, the market. the market got here and has some support.
Right. Everybody should know how to use trading.
Yeah. What is the
How many is it now?
okay? Where are the tools? Here? Down.
Yeah, yeah, yeah.
Okay. So, um, for example, let me start from here. The market had some support here, and okay, there are multiple resistance and support. So,
Just give us
okay,
two
and,
of each.
and the market got here and it has some resistance. Some resistance here. There's a resistance here. Resistance here. There is support here. There are multiple resistance and support.
You you know how to identify it.
Yes.
We're gonna learn the definition. We'll give him 2.5 class.
Thank you.
So it's still talking about support and resistance. Come on. Yes. Come and help us identify key levels. And tell us what key levels are and identify key levels for this chart. Let's welcome her. Just give us one key level that has more than three touches, three or more touches. Yes. Huh? What are key levels? Oh, Mama, you're not in class. You're not in class when they're teaching them. What are key levels?
Sea level to point out I can point out
Oh, yeah, okay, point it out. Draw it. See that rectangle too. Tap, click it, drag. Drag it. Look at that blue. See that blue? Drag, drag, click and drag. I don't know how to use trading. You need to get learn. Let's give Mama half half clap. And you need to help us. You need to be able to demonstrate it.
I've not done anything like trading.
Why?
And when I wanted to use my
Okay. Thank you, ma. No, no, one is okay. So let me see. Someone else will come and draw key levels for us. People are looking at me like if you call me, I will buy to go. I not fear. Okay, sir. So you define key level for us and demonstrate one.
Yes. Key
Right,
levels are
so what is key levels? Teach us what key levels are.
key levels are area the market gets to when that's when there's a war between buyer and seller.
People are forex traders now. I want you to and to define it according to the forex terms. What are key levels?
Key level and key
Don't use. I know you are using eco. Don't use eco. You are forex traders. Give me forex terms. What is key levels?
levels are those areas when the market gets to change of market. There's reversal. That is I think is a key level levels where market gets to, and when market gets there, there is a change in the trend.
Okay, let's see if you can demonstrate.
Yeah, I can put
You're not giving me. You're not giving me definition.
okay. This is the key level. This is the key level where market gets to.
Class, is it right? Huh? How is it right? No. What you do is a support.
No. If it is key level, this is key level. Okay, wait. Hold on. These are key levels. Key level. Hold on. These are other key level. These are other key level. These are key level. These are key level.
No, what you are showing us is support and resistance.
Ah,
Key level is different. It's slightly different.
okay.
So, class, who can tell us what key level is? Yes, it's a key level there, but you're not getting you're showing us support and resistance, but you're telling us in regard of support and resistance. There's a key level here. But I want you to get the idea between what this is.
Okay.
Understand?
Okay.
So you
I think. No, focus.
to me,
Mr.
I've
Yes.
called you before.
Okay.
This one. No, this one. Oh, you just came. Oh, you call? Expert. Okay. Okay. You.
Let him come. Come, for.
I'll call you for another thing. Come on. You have been in the class, have you? Come on. Explain what key level is and draw it out.
Yes. Well, so I don't know if there's any difference between key zones and key level. I don't know if there's any
Key zones,
difference.
key level, same thing.
They are the same
But
thing.
explain it.
Well, in relation to what I'm just saying now, which is looking like a new thing. It's looking like a new thing now.
Something like a new thing. Yes. Why?
Because
while slow markets would literally freeze your time and efforts. Actively traded markets will give you a good chance to catch a good trading opportunity and make profits. As you can see on this map, from Sydney opening in Asia until the US closes, the market is constantly operating from Sunday to Friday evenings, measured in GMT. This map helps you visualize those times of the day. The continued liquidity of the forex market is based on the fact that there's always a market open somewhere around the world. One thing to keep in mind is that there are three main sections that gather most of the trading volume, and those sections are related to the main local share markets opening and close: London, New York, and Tokyo. As a general rule, a specific currency will usually be most active when that particular market is open. For example, the Oxy and its related pairs, while active and tradable 24 hours a day, tend to be most active and widely traded during the hours when the Sydney market is open. Meanwhile, the pound and its related pairs will be more widely traded during the London business.
But you guys understand that diagram, Abi? Yeah, so that's that's that about market sections.
The best part from
So that's the most favorable time to trade, best trading time. But you can trade either of any of these sessions according to your trade pattern or strategy or whatever. Now that's so. Any question? Any other question?
risk management. We've not touched
Risk management. Did I used to teach risk management?
that
Hmm?
this week.
Oh, okay. Risk management. Okay. Well, basically, risk management deals more on. It depends on your psychology, on your um personal strategy. There are different types. Where's our canvas thing? Where? Uh-huh. Okay. So mm, some, where? Huh? Okay. Okay. Where? This one? Oh. Mr. Michael. I did. Okay. So I just do a quick. Uh, eh? Now, like I said before, risk management depends on your personal trading strategy that you have or psychology. But basically, we have different types. We have and so on and so forth. So R to R, meaning risk to reward ratio. Now also this thing is detailedly explained on Coach Marks too. You can find it on Coach Marks. So but then what do this I'll just teach you briefly on what this is. One to one means that you are risking an equal amount of what you want to risk and what you want to gain. For example, if you have $100, you put your stop loss to $5 or 5%, you put your TP to what? 5%. That's what is called one to one risk to reward ratio. Now in this kind of trading, you might not probably be going anywhere, right? Like because okay, let's say that you are doing a one to one risk to reward ratio and in a week, 5 days, let's say you won 3 trades and you lost 2 trades. There is a probability that normally if you are following the one to one ratio, you won 3 trades and lost 2 trades. That means you only won 1 trade out of the whole 5 days. So that's like $100, $5 in 1 week. So your $100 is now 105 in 1 week. So all those stress of you making uh, so it's not really, I will not really advise it because you know your growth will be very short, it will be very slow. Understand? So if you want to start at all, start from at least 1 to 2. So 1 to 2 means that you are risking 5% to get 10%. So let's say out of the 5 days you lost two two times out of the 5 days. So that means in 5 days, if you are following 1 to 2, that means you are making $10 per day, right? In 5 days, that's 50. Let's say out of the 5 days you lost two, so you have 30. It's still a good, you understand? It's still a good risk to reward, huh? Hmm? 5, 10. Okay, you lost 10, 5, 10. Okay, sorry. So that's 20. That's 30. No, 5, 5. Oh, sorry, that's 10. That's 40. That's 40. It's a good, yeah. And that's why I say that it depends on your, because most times you people do not used to wait till your TP. Yes. That's so I will tell you that's not a good way to trade. Yes. Because you know one thing about you entering the market and you not getting to your TP, it will not show on your PNL. It is not going to show, it will not record you on, like, if there's a place, I think there's a way on Xness that shows your growth rate. Yes. If you want to check that stuff, it is not going to record it. Any market that you yeah, any market that you entered and you do not get your tip, it will not show you as, it won't record you. eh it means that you are not trading right. You are just scalping, you are just, so you are getting your money but you are not trading right. This thing affects psychology in a way, you understand? So most times, if you enter a market, that is why it's always good to make a right analysis before entering market. Know what you want to risk, know what you want to, even if I want to even say it now, the idea of breaking even, the idea of taking partials is not really, it's good, yes. It's good, but it's not really trading. For me, I prefer that when you enter a market, you put your stop loss, you put your take profit, let the market hit one of them. Yes, yes.
Talking about risk management for beginners now, and you have like $100.
Yeah.
What do you advise?
For $100, $5 is good. 5%, 5 to 10, 5 to 10% is 1%. See, this thing is there's no template. It's about your own personal what you can risk and what you can get. You understand? So that is why everybody. So there's no trader on earth that has the same pattern. You can copy other people, you can imbibe other people's strategy, but there's no trader on earth that has the same pattern, because everybody thinks separately. All of us can be in the same trading group and they'll send the same signal and we have separate, and everybody here we have separate results. Yes. So they can send one signal as all of us are in a room. Some people will hit stop loss, some people will hit TP, some people will break even, some people will take partial. So there's nobody in this place that we have the same results for one signal. That's to show that everybody trades separately. Everybody has their own personal way of trading. So when it comes to risk to reward, it basically depends on your own personal method of trading. You understand? But there's a template that there are some people that one-to-one works for them. You understand? There are some people that one-to-one works for them. There are some people that they can't take a trade if they don't see a possibility of 1 to 3. Meaning TP1, TP2, TP3. So 1 to 2 means TP1, right? Now it now depends on the values that you set for your TPs and your stop losses. But then the basic form of trading, your risks for beginners, I'll say you should start from 1 to 2. But then don't risk more than, I won't put a specific figure. Don't risk more than what you can't take. For example, don't hold a loss of $50 if you cannot take a profit of $50. Don't risk your equity. Don't say that because you can't hold, don't risk a $50 for $5. There are some people that you enter your trade and your trade can enter, let's say with $100, you can enter as much as $20 loss. You can hold it, but as soon as the money gets to $3 profit, you take it. That's a bad trade. That's a bad psychology. So if you cannot take $20 profit, don't hold $20 loss. Do you understand? So take a profit that you can lose, but then put your risk to reward into place. So for someone like me, there are sometimes that even if for let's say for an example, you want to risk 5% of your equity. Now one thing you have to understand is that the lower your equity, the closer your percentage is. For example, now with $50 now, someone like me, I can risk 100% because it's $50. You understand? It's small and I can make 100%. But the bigger your equity, the smaller your percentage should be. For example, if I'm taking a profit, hmm, your profit, and the smaller your percentage in loss should be. For example, the same percentage, like for 5% of $50 is what? $2.5. Who in this place cannot make $2.5? Or who in this place will lose $2.5? I will be done for the day. You know? So most times, that's why most times people with smaller equity tends to make bigger profit or loss. But then it's easier to make 30%, 20% with small equity. But it will be harder to do on a large account. For example, if this is $5,000, if you are looking for 30%, 30% of 5,000 is what? That's 750. Abi 15. 15. Now, if you are trading this kind of, you might be a little bit agitated because it will cause you to want to increase your lot size to more than what you can bear. But if you are doing 5% or 10%, it's easy to make 250 or 500 with a $5,000 account. So you have to be able to understand. So that's why I said everybody's risk to reward is different based on your psychology. But the most important thing is that you are making progress. You understand? The most important thing is that you are making good trades. One thing I will tell you, always let your trade hit TP. At least TP1 before you run. Yes. No, you can make your TP1 can be ratio 2 to 1, depending on the kind or your, for example, let's say we entered market at, let's say we entered gold, entered market at 3,000, at the price of 3,000. My TP1, let's say for a sell, my TP1 can be at what, 2,950, right? For a sell, if I'm hmm? Okay, well, let's say 3,050 for a buy. This is pips. Okay. They don't do Elliot before. They don't do Elliot. So let's go for long position. Yeah, we get- So for example now, this market entry is at 3,390. Let's say our TP1 is at 3, let's say 3,440. Let's say 3,480. Now, if you use this tool has already calculated your risk to reward, right? As you can see it here, your stop loss is $41. Profit, you understand? So now, looking at this now from 4, this is 3,390 up to 3,480. Let's say that's where your TP1 is, and let's say that will give us a $100 profit, right? Let's say I'm just giving us a figure. Let's say from this 3,390 to 3,480, it will give us $100 profit. That means your loss should be within 50. That's ratio what? 1:2, right? So your loss should be within 50. So don't take this trade and don't wait for it. Don't take it out before it gets to your TP1. Hmm. Now, why are you taking a trade when you know that it's not get to TP? Hmm? No, don't collect the one you can collect. See, well, hmm? Taking profits is okay. You understand, but then you are not making a good trade. It is it's it is how long how long we need to work. How long see this thing is about consistency, you understand? So I need I need you guys to understand something first. I'm not saying that you should not take profit at all, right? It's good. Take your profit. When you see your profits, when you see a reasonable sum of money, take your profit. But then put your TP to that reasonable sum of money that you want to make. You understand? Don't say that you have analyzed or you have finished analyzing this market and you say that okay before you enter, because before you enter a market you already know the destination that you want to have in mind. Is it that the market gets to this zone or the market gets down to this zone? That is your idea of entering the market, right? So why would you enter this market? Why would you analyze this kind of market? The market was here, right? Why would you analyze the market knowing that this market will get to at least it will get to this zone before reacting? Let me take out this thing. It's disturbing me. Now you guys listen carefully now. You saw this chart pattern, right? This chart pattern. Let's say the market was, I don't know if this thing will work. It does not work, Abi. Now you are seeing this market, right? You saw that there was a decline, there was a bearish movement, then indecision. You now say okay after this indecision the next candle that forms will form your trade. Then you now saw this candle. What does this candle indicate? After an indecision you see a bullish candle. You already know that okay this market will at least get to this zone, right? Where's my, you are envisaging that okay at least from here I'm going to buy up this market to at least this zone before e react, because you know that definitely this market will touch this zone. So you now enter the market for buy, and as the buy was playing out you now see this one. You're already in profit, right? You bought from this, let's say you bought from, as soon as you saw this bullish you bought from here, right? Market retrace small, but you're already in profit in this place. Yes, you'll be tempted to take out your money, but you have defeated your psychology. Why? Because you know definitely that this market is going to get up here and it is going to maximize your profits and also give you more confidence. You see that the market got there. So now when you now take out your profits here, how will you feel when you now eventually see that the market got to your at least TP1? How would you feel? Hmm? You did not lose, but you are not going to feel good about your trade because you made an analysis that, and you know that is going. Me personally, if I do that, if I make this kind of analysis and I enter the market and I get here and I take out my profits here, I won't feel good because I've defeated my mental psychology of trade, because I know definitely this market is going to be here. It's just like, for example, now you say that um you don't drink carbonated drinks anymore. Like you used to drink carbonated drinks like Seven Up, Coke, and Fanta, and like okay, I don't want to drink carbonated drinks anymore. So you now saw, maybe you went to a birthday party. They were not sharing all those though it is not the full bottle, let's say it was all this small bottle, but you collected it, how would you feel when you have already made a personal decision that you're not going to feel really good? It's the same thing as trade. You have already analyzed this market, so you already know that is either this market gets to this place or the market comes down to this zone and take me out in stop loss, right? So is either market will get to your stop loss or the market will get to your TP. Stop taking out, except you do not know what you are doing, that's when you are taking out your money. You understand? So for people that take out their money, I just know that okay, maybe you are a beginner or intermediate, but for people that are advanced and you know how to analyze your market, you already know the market bias, your market sentiment, you know where your zones are and all that. Don't make a precise analysis like this and now jeopardize it by taking out profit because eléyìí tá a rí là ń mú. You understand? Let it, this thing will help, it will help your mind in a way. If you take, if it will build up your psychology in a way because it will give you more confidence to enter good trades. It's better to lose a winning trade than to gain a bad trade. Do you understand? Don't put your TP to where you know that market will not get to. When you analyze your market, put it in a place that you know that okay, at least this market will get here, and don't take out your money till it gets to that zone. Is either it touches your TP or it touches your stop loss. Yeah, yeah. Yes. It's to show, it's to track your growth. It will. There's a different program for that one. So there's a track record. Track record for your trading is for your own personal analysis, for you to analyze the kind of trader maybe you have been profitable for a while. Then the bonus that you're talking about, there's another program on Xness that the more you the more you get higher in stages, there is a bonus for each level. It's called IB, something something broker. I've forgotten the name, but it's called the IB. So that one, that is a separate program for people that, let's say you referred some people, you brought in some people into Xness. There's a yes, referral. There's introducing brokers. Yes, that's what they call IB. So it's a referral kind of stuff. So in Xness, that's another way to make money on Xness, because the number of people you bring into Xness, you make money from their trades. Yes, any trade they make, you make money from it, whether they lose or sell. Hmm? Hmm? Yes, whether they lose, you make money from their trade. You understand? Yeah. Somebody, so so most times people don't usually give you guys this secret, but me, I will give you people because life is short. Anybody can make money. So now, if anybody sends you a link to for you to register on Xness, you are registering under somebody's link. That means it's that person that referred you. So whenever you make money, that person is making money from your trade. Yes. So the profits they make is based. Oh, this station is offline. Sorry. This in-house gist.